Southeast Asia's major economies continue to show a strong economic rebound in the first quarter of 2022. In 2 consecutive quarters, the Philippines emerged as the growth leader in the region, expanding its economy by 8.3% in the first quarter of 2022, and 7.8% in the fourth quarter of 2021. It was followed by Vietnam, growing by 5.03% in the first quarter of this year, and 5.22% in the fourth quarter last year. Southeast Asia's largest economy sustained its economic growth by expanding 5.01% in the first quarter of 2022 and 5.02% last quarter. While Malaysia's economy rebounded stronger in the first quarter of this year, growing by 5% as compared to 3.6% growth in the fourth quarter of 2021. Meanwhile, Singapore's economy grew by 3.7% in the first quarter of 2022, moderating from the 6.1% growth in the preceding quarter. Thailand's economy is one of the slowest in the region, with minimal growth of 2.2% in the first quarter, and 1.9% in the preceding quarter, but growing faster than expected. The Philippines' economy continued to expand in the first 3 months of the year, as the country overcomes the greatest economic and health challenge it has faced. According to the Philippine Statistics Authority, the country's gross domestic product, GDP, grew a better than expected 8.3% in the first quarter of 2022. Faster than the 7.8% in the fourth quarter of 2021, and a reversal from the negative 3.8% growth rate in the first quarter of 2021. The Philippines' economic size has currently surpassed its pre-pandemic GDP levels. As far, the Philippines is growing stronger compared to its neighboring ASEAN nation, where Indonesia grew by 5.01%, Vietnam by 5.03%, and Singapore's 3.4%, based on advance estimates. The growth was due to the country's improved healthcare capacity and accelerated vaccination program that enabled a strong and quick rebound from the surge in COVID-19 cases in January caused by the Omicron variant. On the year-on-year basis, major economic industries grow significantly as the country eased restrictions to Alert Level 1 and implemented limited granular lockdowns, as well as the shift to an endemic from a pandemic mindset, have restored jobs and businesses. The industry grows by 10.4%, followed by services which expanded by 8.6%, and minimal growth in agriculture, forestry, and fishing by 0.2%. The slowdown in government spending in the first quarter will be temporarily caused by the election ban on new projects, where public construction contracted by 4.9%. In aggregate, the growth was mainly attributable to transportation and storage, which grew by 26.5%. Other services grew by 22.3%. Accommodation and food service activities grew by 21%. Mining and quarrying grew by 17%. Construction expanded by 13.5%, and manufacturing activities increases by 10.1%. Due to higher household and other domestic demand, imports grew by 15.6%, and exports expanded by 10.3%. By aggregate, the import of goods grew by 12.6%, while the import of services expanded by 32%. On the export side, the export of goods increased by 5.9%, while the export of services grew by 16.2%. The Philippines' GDP per capita also expanded by 6.9% in the first quarter of 2022, compared to a 5.1% contraction in the same period last year. Per capita GNI, and per capita household final consumption expenditure also expanded by 9.3% and 8.7% this quarter, compared to the 11.7% and 6% contraction in the same period last year respectively. Meanwhile, the unemployment rate in March 2022 fell to 5.8%, the lowest since the start of the pandemic. The government is aiming for a gross domestic product expansion of 7% to 9% this year, and 6% to 7% in 2023 and 2024. Based on advanced estimates, the gross domestic product or GDP of Singapore and Vietnam show positive growth on the preliminary data issued by each country. Singapore's economy grew by 3.4% on a year-on-year basis in the first quarter of 2022, moderating from the 6.1% growth in the preceding quarter. On a quarter-on-quarter seasonally adjusted basis, the economy expanded by 0.4%, slower than the 2.3% growth in the previous quarter. On the other hand, Vietnam's first quarter of 2022 economy was estimated to increase by 5.03% over the same period last year, higher than the growth rate of 4.72% in the first quarter of 2021, and 3.66% in the first quarter of 2020, but still lower than the growth rate of 6.85% in the first quarter of 2019. Singapore's manufacturing sector expanded by 6% year-on-year in the first quarter of 2022, moderating from the 15.5% growth in the preceding quarter. The construction sector grew by 1.8% year-on-year in the first quarter. In absolute terms, the value added of the sector remained 25.3% below its pre-pandemic level, as activity at construction worksites continued to be weighed down by labor shortages. Among the services sectors, wholesale and retail trade and transportation and storage sectors posted growth of 3.2% year-on-year in the first quarter. The information and communications, finance and insurance, and professional services sectors collectively expanded by 5.3% on a year-on-year basis in the first quarter. While accommodation and food services, real estate, administrative and support services, and other services sectors grew by 3% year-on-year in the first quarter. Vietnam's agriculture, forestry, and fishery sector increased by 2.45%, contributing 5.76% to the overall economic growth in the first quarter of 2022. By aggregate, the added value of the agricultural sector increased by 2.35%, forestry increased by 3.86%, and the fishery sector increased by 2.54%. The industry and construction sector increased by 6.38%, contributing 51.08% to the overall economic growth in the first quarter of 2022. The processing and manufacturing industry continued to play a leading role in the growth of the economy with an increase of 7.79%. The mining industry grew positively by 1.23%, while the construction grew by 2.57%. Financial, banking, and insurance activities increased by 9.75%. Transportation and warehousing increased by 7.06%, wholesale and retail increased by 2.98%, and accommodation and catering services decreased by 1.79%. Regarding the structure of the economy in the first quarter of 2022, the agriculture, forestry, and fishery sector accounted for 10.94%. Industry and construction accounted for 37.97%. The service sector accounted for 41.70%, and tax product accounted for 9.39%. According to the latest data published by BPS Statistics Indonesia, the national economic recovery currently underway in Indonesia remains intact given increasing community mobility and amidst escalating geopolitical tensions between Russia and Ukraine. Domestic economic growth was solid and stable in the first quarter of 2022 at 5.01% year-on-year compared with 5.02% in the previous quarter. Positive economic performance in Indonesia has been fueled by growing domestic demand and maintained export performance. Furthermore, the national economic gains have been replicated in most sectors and all regions. Moving forward, the Indonesian economy is expected to gain momentum, with Bank Indonesia projecting growth at 4.5 to 5.3% in 2022, supported by a faster vaccination rollout, broad reopening of economic sectors as well as policy stimuli instituted by Bank Indonesia, the government, and other relevant authorities. In terms of spending, the economic recovery in the first quarter of 2022 was driven primarily by household consumption, which accelerated significantly to 4.34% year-on-year from 3.55% in the previous period. Investment grew 4.09% year-on-year in the reporting period, mainly supported by non-building investment, yet the growth of building investment was also sustained. On the other hand, government consumption contracted by 7.74% year-on-year in line with improving COVID-19 pandemic conditions that reduced procurement and social assistance disbursements, particularly for COVID-19 containment and mitigation measures. Exports continued to perform well, expanding 16.22% year-on-year on the back of solid demand in Indonesia's major trading partners and the limited impact of geopolitical tensions between Russia and Ukraine. Imports in the first quarter of 2022 grew 15.03% year-on-year in response to strong export performance and increasing domestic demand. Nearly all economic sectors recorded positive growth in the first quarter of 2022, particularly the manufacturing industry, retail, and wholesale trade as well as transportation and storage, given greater community mobility in all regions. Spatially, all regions of the Indonesian archipelago recorded positive economic growth in the reporting period. The Malaysian economy is expected to maintain its recovery momentum in 2022. According to Bank Negara Malaysia, the country's gross domestic product grew by 5% in the first quarter of 2022, supported by increases in both domestic and external demand, as well as labor market recovery, as economic activity continued to normalize with the easing of COVID-19-driven containment measures. Throughout the first quarter of 2022, monthly GDP grew consistently at a rate of 4.3% in January, 5.2% in February, and 5.4% in March. On a quarter-on-quarter seasonally adjusted basis, the economy grew by 3.9%. Strong external demand amid the continued upcycle of the global technology sector provided further lift to growth. On the supply side, the services and manufacturing sectors continued to drive economic growth, expanding by 6.5% and 6.6% respectively. Overall, this was reflected in strong manufacturing sales, which increased by 13.9% in March 2022, as well as wholesale and retail trade sales, which increased by 9.8%. The agriculture sector marginally rose by 0.2% in quarter 1 of 2022 compared to 2.8% in the preceding quarter, while the mining and quarrying sector further decreased by 1.1% from a marginal decline of 0.6% previously. Meanwhile, the construction sector declined by 6.2% from 12.2% in the fourth quarter of 2021. Availability of financing continues to improve, as evidenced by an increase in household loan growth. Outstanding household loans increased by 4.8%, which is in line with the 12.7% increase in loan disbursements, outpacing the 3.3% increase in loan repayments. On the other hand, the central bank unexpectedly raised its benchmark interest rate to 2% from a historical low of 1.75%, citing a firmer domestic growth path as well as inflationary pressures stemming from the Ukraine conflict and global supply chain disruptions. Robust external trade and foreign direct investments. Total trade rose 23.6% to 624.9 billion ringgit, while net FDI increased to 24.4 billion ringgit. Manufacturing, financial and insurance, topical activities, and wholesale and retail trade attracted the most FDI, primarily from Switzerland, the US, Hong Kong, and Japan. Headline inflation moderated to 2.2%, while core inflation increased to 1.7% during the quarter. This reflects price adjustments amid the higher costs and improving demand conditions, with price increases being more noticeable specifically for food items due to supply-related factors such as higher global commodity prices. The Malaysian economy is expected to improve further in 2022, during which annual GDP growth is projected at 5.3% to 6.3% as announced in March 2022. Thailand's economy grew faster than expected in the first quarter of 2022, supported by a pickup in agriculture and an easing of COVID-19 curbs, but higher inflation remained a threat to a fragile recovery. According to the National Economic and Social Development Council, Southeast Asia's second-largest economy in the first quarter of 2022 expanded by 2.2% year-on-year basis, accelerating from 1.8% growth in the previous quarter. Seasonally adjusted, the economy increased by 1.1% from the last quarter of 2021. On the expenditure side, the economic growth is primarily due to higher private consumption expenditures, which increased by 3.9%, accelerating from 0.4% growth in the previous quarter. Government consumption expenditure increased by 4.6%, decelerating from 8.1% growth in the previous quarter. In foreign trade, export value was recorded at $73.3 billion, increasing by 12%, continuing from the previous 17.6%. While import value was recorded at $64.1 billion, with 6.7% growth, compared with 16.4% in the preceding quarter. Total investment grew by 0.8% from a 0.2% decline in the previous quarter. By aggregate, private investment expanded by 2.9%, recovering from a 0.8% drop in the previous quarter. While public investment declined by 4.7%, compared with an expansion of 1.7% in the previous quarter. On the production side, agriculture, forestry, and fishing sector rebounded to 4.1%, improving from a 0.6% contraction in the previous quarter, following increases in key agricultural productions. The manufacturing sector increased by 1.9%, decelerating from a 3.8% expansion in the previous quarter. Overall, the service sector grew by 2.9%, accelerating from a 3.8% expansion in the previous quarter. By aggregate, the growth of the service sector was attributable to the accommodation and food service activities sector, showing the first expansion in 3 quarters by 34.1%, improving from a 4.9% contraction in the previous quarter. Wholesale and retail trade continued to increase for the 4th consecutive quarter by 2.9%, compared with a 3.0% growth in the previous quarter, following the improving household spending, the increasing number of foreign tourists, and the continual expansions of production and export. The transportation and storage sector also continued to grow for the 2nd consecutive quarter by 4.6%, accelerating from a 3.2% expansion in the previous quarter, following the continued expansion of air transport. Information and communication grew by 5.9%, expanding from 5.3% last quarter, while financial and insurance activities grew by 1.5%, decelerating from 4.4% in the previous quarter. On economic stability, the unemployment rate stood at 1.5%, declining from a 1.4% in the preceding quarter and a 1.9% in the first quarter of 2021. The headline and core inflations were 4.7% and 1.4%, respectively. The Thai economy in 2022 is projected to expand in the range of 2.5 to 3.5%, mainly supported by the improvement in domestic demand, the recovery of domestic tourism, and the continual expansion of the export of goods.